Hey traders, Jason here from Leavitt Brothers. In today's video, I'm going to discuss my favorite intermediate term setup. Okay, I do have longer term holds that I let sit, and I do shorter term trades, but the bulk of my attention and profits come from intermediate term trades where I'm looking to nail a trending move. Okay, there's nothing wrong with pecking away and making a few points here and there with shorter term trades, but I prefer trades that last a couple months and possibly even longer. There's two reasons for this. One, as Jesse Livermore said, you don't get rich taking a 4-point profit in a bull market. And two, and much more importantly, it fits my personality. Okay, I don't want to be glued to my computer screen all day long. That seems like a stressful job. If there's a demand, I can do a video describing how and why I developed my style the way I did. But for now, let's get on with this video. This is my favorite setup. Okay, so my favorite setup is on a weekly chart. Okay, where I use a 30-week moving average. Okay, most of the time. Sometimes I use a 20, other times I use a 50. Most of the time I use a 30, and at the very least I start with a 30. Okay, here is the setup. A stock trends down under its declining 30-week moving average. Okay, during this time I have absolutely no interest. Okay, I don't pick bottoms. I want to ride a trend, and I have no desire to guess when a stock is going to bottom and a new trend is going to begin. I'm perfectly happy to miss the first 10%. Then you get a volume move through the moving average. This gets my attention. Okay, there are no guarantees a trend is going to change. The trend is going to change, but at this point the stock gets its way onto my radar. After this, I'm looking for one of three things to happen. Number one, the stock comes back down to test the moving average, and then it moves up, takes out the recent high, and begins an uptrend. Okay, sometimes there's only one test of the moving average, other times there are two. In either case, I'm looking for a successful test, often a couple months later, that tells me that the downtrend is officially over and buyers are taking control. The second scenario I'm looking for to play out is you get some sort of easily definable pattern that then forms, and then there's a breakout. Okay, during this time the moving average will flatten out and then start to curl up. It's as if the stock used so much energy to get above the moving average, it needs to rest a few months before officially beginning its uptrend. The third scenario that I'm looking to play out is the stock trades very sloppily above the moving average and eventually continues up. Okay, there could be lots of up and down movement, no clear pattern, there could be gaps. It's just kind of sloppy action while the moving average starts to curl up and starts to support the stock. Then the stock rides the moving average up, and if you're lucky, you'll hit an inflection point, and the rate that it's moving up will start to accelerate. Okay, let's look at a handful of examples of each one. Okay, here's Caterpillar. Okay, it was trending down for several months, actually more than a year. It gets above its moving average, the declining moving average. We have some nice volume here at the beginning of 2016. After it rallies up, it comes down and tests the moving average, goes back up again, goes up again, then it tests the moving average again. We have clearly definable resistance here, and eventually the stock breaks out and begins its uptrend. This is a classic textbook pattern. Stock is weak, gets above its moving average, spends a couple months forming some sort of pattern as it restores its energy, uses the moving average as support, and eventually it continues up. This is a classic pattern, textbook in my eyes. Here's another example, Vale, or maybe Bale since it's a Brazilian company. Stock was weak, trended down, gets above the moving average on a big surge in volume, rallies up, comes down and tests the moving average, rallies up again, comes and tests the moving average, which of course is now at a much higher level. Resistance line can be drawn, stock breaks out and almost doubles over the course of several months. This is another textbook pattern. You have a stock that's weak, gets above the moving average, forms a pattern above the moving average while the moving average flattens out, and then eventually starts to trend up, and then you get a breakout and an uptrend officially begins. Here's ADI, a little bit more of a little sloppier pattern. Stock traded flat for many months, some ups, some downs, traded above and below the moving average. Then in the middle of 2016 here, you got a run where the stock gets well above its moving average, gets some distance there, okay, which is something you look for. A stock breaks out, there's some volume here, gets some distance, that gets my attention. Then it spends the next 3 months forming a little pattern at a higher level. Okay, twice it tested the moving average, which at that point in time was trending up, and then you get a breakout and a resumption of the mini trend that had started back here. Okay, so this is the first two examples were examples of stocks that were trending down and then reversed. This is an example of a stock that was flat, starts to come to life, trades in a pattern above the moving average, and then continues on. Okay, AMD traded flat for many months, broke out, rallied up, came down and tested the moving average, then kind of rode its moving average for a couple months, and then breaks out and continues to trend up. Okay, another textbook pattern. Okay, most of the ones I look for are actually coming out of a base. In this case, this was a continuation move within an uptrend that had already been established. Another classic pattern, bid, trends down, weak stock, moves up above, trends up, gets above the moving average, comes down here, tests it, and then rallies up, and then you can see it forms a pattern at a higher level while forming an easily definable resistance level. Support is at the rising moving average, and then eventually it breaks out and continues up. Okay, 3M. This one I used the 50-week moving average. Okay, it had resistance here at the 50, and then support here and here. The sequence of events is basically the same. Okay, it gets above the moving average. You have big volume over here. Months later, it comes down and tests the moving average, comes back down, forms a lower high, which gives you an opportunity to draw a resistance trend line. In this case, it's at 180, which is a nice whole number. Comes down and tests the moving average again, this time at a higher level because the moving average is rising, and then it breaks out and continues to trend up. Okay, classic pattern, perfect. We got a double bottom, breakout, pattern at a higher level, and then a continuation breakout. Okay, another perfect setup in my book, a weak Suncoke. It's a really weak stock, trended down, 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 broke out from a tiny little base here. Okay, that got my attention. Gets above the moving average, then spends several months trading sideways in a range. The moving average, which had been obviously trending down, flattens out, then starts to trend up. You have same highs, higher lows. The stock essentially gets scooped up by the moving average, and eventually it breaks out and runs up a couple points. Okay, it's exactly what I'm looking for. Okay, you have a weak stock. When it gets above the moving average with some volume, that gets my attention. That tells me that the tide may be turning. Okay, a lot of energy is needed to do that, so then it takes a few months to rest, and then once it's done resting, it can continue on. Okay, again, I'm not really interested in the beginning of the move. Okay, I want the bulk of the move in the middle. Okay, now let's look at some examples that fall into a different category. Here's ATHM, sloppy stock, trended down. If you look, there's a couple times where it gets above the moving average, but then it immediately drops back below. You can see here in November, it gets above the moving average, comes down and successfully tests it, rallies up, comes down and successfully tests it again, and then rallies up again. Okay, so this is an example of a stock that will test the moving average a couple times, but it won't necessarily form a clearly definable pattern, yet this is still tradable in my book. Okay, you have a stock which is pretty much nondescript and uninteresting, but when it gets above the moving average and then comes down and successfully tests it, that's when it gets onto my radar. Here's Apple. Yes, it works with all stocks, not just obscure stocks that nobody follows. Apple had trended down for about a year and a half, rallies up above its moving average, comes down and successfully tests it, rallies up again, comes down and successfully tests it, and then rallies up like 50%. Okay, at a time that Apple was already one of the biggest companies in the world, it rallied 50%. And the signals were right here: weekly chart, 30-week moving average. Twice we got successful tests of the 30, and then the rate that it was moving up accelerated. Okay, another example, FedEx, not exactly a high flyer, but it still works. Okay, notice here we have resistance here at the 30-week moving average. When I see that, it lets me know that this moving average is very telling, and it's very likely that it's going to become an important moving average later on. Okay, because again, most of the time I use a 30, but sometimes it's a 20, sometimes it's a 50. So I'll look back and I'll say if the moving average acts as as an important support or resistance level early on in the chart, then there's a good chance that that same moving average will be very telling later on. Okay, so it acted at resistance here. We got a big surge above the moving average. A couple months later, it comes down to successfully test, comes back up, rallies up, comes down to successfully test again, and then it rallies. And as you can see, after trading in a pattern for several months, the 30-week caught up and it recently broke out. Here's Unit Corp. Again, just a great example of one of my favorite setups. Stock's weak, gets above the moving average, comes down and tests it one more time, kind of rides it up, and eventually hits like in a little inflection point and just accelerates. Okay, it doesn't really form a definable pattern because it trades above and below resistance there. But when you get a successful test of the moving average and then it moves off that, you're long with at least a starter position, and you're not selling the position until the 30-week is taken out. Okay, especially in here where your risk is minimal. Okay, another kind of setup is the one where you don't get a pattern, you don't get a clean test and then higher high. Here's an example of a stock that just kind of grinds up above the moving average. Okay, Allstate trended down. You can see the resistance level here. Okay, it gets above the moving average. We got this huge block of volume here, and then it just kind of grinds. It just kind of grinds up using the moving average as support, and then eventually it hits an inflection point and just takes off. Okay, this happens too. This is one of the scenarios where you don't get a clearly definable pattern, you don't get a clean test and then a higher high. The stock just kind of rides its rising moving average up, and if you're lucky, it'll hit some sort of inflection point and accelerate. Here's Broadcom. Stock was moved up, then flat. You can see it traded above and below its moving average, but it's not until here in May of 2016, after the stock had gone up, made a new high, came down and tested the moving average successfully, and then it just rode the moving average up, and then at the beginning of this year it hit like an inflection point and actually took off. Dominos Pizza did a very similar thing, traded above and below its moving average, but it wasn't until the beginning of 2016 that it surged above it, came back down about 2 months later to test it, rode the moving average up for several months, and eventually accelerated after that. Okay, so in this case, I'm using it to identify when the stock is playable. I don't want to play it while the stock sits in a range right here because there's too much opportunity cost. But once the stock gives me evidence that it's starting a new trend, then I'm interested in getting in. Okay, I'd rather buy at 120 after the trend has started rather than buy it at 100 when I have to sit for months and months and months waiting. Okay, another example, KB Home, flat stock, kind of came down, got above its moving average, tested it successfully, came back up, came down and tested it again successfully, never really took off, but never really gave us a reason to sell. It just kind of grinded its way above it, and then eventually it hit like an inflection point and took off. Okay, you guys get the point. I'm looking for a stock that's going to get above its 30-week moving average. Obviously on the weekly chart, I want it to form some sort of definable pattern or test that moving average and then continue up. Okay, not looking at the dailies, I'm not looking at the 5-minute chart or whatever. Obviously, if you're going to hold a stock for many months, you're going to have to hold through earnings. But this is what I do this is my favorite setup. This is what I do in order to nail, bigger trending moves. Okay, most of these setups were posted at Leavitt Brothers, okay, where we publish weekly and daily reports that help you get in the market on the right side of the trend and keep you there. And we also post trading ideas. Some are short term, others are longer term, like what I've talked about here in this video. We have 2 different websites. LeavittBrothers.com includes everything: daily reports, weekly reports, trading ideas. LeavittBrothers.net unbundles everything, so you can subscribe to just what you want. Some traders only want our weekly analysis. Others only want our trading ideas. Okay, so either one is a good option, whatever suits you best. Okay, come join us. Let's make some money together. Until next time, I'll see ya.